Hi, I'm going to show you a way to pay off your car loan faster using a credit card. And it's a little bit of a trick or hack, if you will. I go over this in many different videos, whether it be for personal loans or credit cards or cars, just giving you ideas and ways that you can pay off things faster in time. So if you've got 24 months left, let's get it down to 18 months, whatever it may be. Or if you've got a 30%, let's get that down to 15, 12, 10, or 0. So we want to save you time, and we also want to save you money, because with the lower percentage rate, paying it off faster, you're going to save money as well. So I'm going to show you an example of a car loan. And these numbers work regardless of what your loan may be. It may look different. So just follow the math along here. And at the end, you'll get an idea of how to do this. It's very simple. Let me walk you through it. So the example here I'm going to give is that you purchased a car for $25,000. I'm keeping this simple. I'm not working in a down payment. I'm not talking about sales tax. I'm not talking about all these additional fees. Let's just say you've got a $25,000 loan. That's what it added up to be. You got it for 60 months, which is, I think, one of the most typical ones. That's about 5 years. And let's just say it's 9%. Could be more, could be less. New car, used car, depends on your credit. 9%. Your payment in this scenario would be $518.96. All right, easy. You pay that for 60 months, goes to 0, car's yours. Let's save you money. So in this example, I'm just going to say at the end of year 3, so you've paid it off for 1, 2, 3 years. Now you may know this, you may not, but you can call up the company and you can say, if I were to pay off the car today, how much would I owe? So you've paid for 3 years, that amount every month, and at the end of year 3, I already put this in a calculator, you would owe $11,359.57. You call them up and they say, hey, you make that payment, and the note's forgiven, it's gone, here's the title, it's yours. Now, is that less than what you would have paid? Yes, because simple math, you've got 2 years left, year 4 and 5, which is a total of 24 months. So $518 payment, you pay it for 24 more months, $518.96 times 24, and you would have paid, over the course of those 2 years, you would have paid $12,455.04. So if you were able to call up and make the payment, that's a savings of $455 plus $650, is that right? $650, $450, it's $1,100, unless my math is wrong. So by paying it off immediately, but you're saying, well, I can't do that. I got to keep making these monthly payments. Okay, so here's the method so you can save money and save time. All right, so I primed the board with some information here. So, and I will put in the description some links to videos showing these types of cards, but there's quite a few out there where you can get a 0% APR on new purchases. Usually it's balance transfers and new purchases. And they'll go from anywhere from 12 to 21 months. So we're going to get one of those cards, 0% on new purchases. So this represents the credit card. You don't owe anything on it, just got it. This is your bank account. This is where your payroll goes, and this is where you make your payments for your gas, your groceries, whatever it may be. And over here this represents, we had 2 years left on our loan, 24 months left, and it's $518.96. So what are you currently doing? Well, you're currently paying for, out of, let's say, gas, groceries, I don't know, some clothing, some restaurants, whatever. And when you go to do these things, you take it out use your debit card, and the money comes right out of the bank account. Let's just say that during a given month, that's $1,400. Okay, those are your expenses. You get paid, you pay those things out of your account, and then you take your $518.96, right? That's your car payment, and you pay that directly to pay down your car payment. All right, so here's what you do. After I show you how this works, I'll show you the savings. What you do during the month is, instead of taking your debit card and paying for these items, you put that in your pocket. And so, for example, you don't use your debit card, you take out this new credit card, and you use this to swipe and pay for gas and pay for groceries and clothing, etc. Here's what happens. That $1,400 is now going to end up over here at the end of month 1. Then you take your $518.96, like you always do, and you make your payment. Let me use a different color here so you can see what's going on. You're going to use your credit card, and that just went up by $1,400. You're thinking, well, that stinks. I got stuff on my credit. But let me show you. We're just moving a balance off of your loan that had 9% interest onto this that has 0% interest. That's what we're doing. We're moving it and we're paying it. And there will be a time and money savings. So charge all your things on your card, and then the $1,400 is still in your bank account, right? Because you didn't make a payment on the credit card yet. You've got your $1,400 there. You take your $1,400 and you pay it over here on your car loan at the end of that month, and you make your $518.96. So in essence, you're paying it down by what? $1,918.96. Well, why were you able to make a $1,400 additional payment on your car? Because you didn't buy these things with your bank money. You used a credit card. All right. So now we're going to do that. And I put it in a calculator, and it turns out if you do that for 4, 5, for 6 months, $1,400 a month. If you do that for 6 months, meaning this is getting moved over there, you're making the additional payment over here. This balance that you owed on your car at 9% at the end of that 6 months is now $0. The car is paid off. You have the title in your hand. Done. But now you've got this balance, which is $8,400. And you're thinking, how is that helpful? Well, the $8,400, is at 0%. So what did we effectively do here? We basically took a 9% loan and turned it into a 0% loan. What does that do for you? Let me show you. All right, so here's the savings. Onto the 0% new purchase credit card, we moved $8,400. By doing that, we were able to pay this car loan that was 9%. We paid that off because we moved the additional money over here, that extra $1,400 payment, and we paid it off in 6 months. And we saved $800. Because remember, in the beginning of the video, if you were to call up the company and say, what's the lump sum payment today versus paying it off for another 24 months, you save on interest. So you saved on interest because you paid off in 6 months instead of 24, right? It's not 24 months, it was 6. Okay, now you've got an $8,400 balance over here. You no longer, since you now are done with this car loan and you owe nothing, you now have $518.96 that you would normally make to the car loan. You're going to make that to your credit card. So you have an $8,400 balance. On that 7th month, you're moving the money here, $518.96. It's going to take you almost 16 months to pay that off. So the first 6 months, car is gone. 16 more months, credit card's gone. 22 months. If you had just paid the card as usual, it would have taken you 24 months, right? So you just saved 2 months. You paid off your car loan instead of 24 months, you paid it in 22. So you saved 2 months. Now that's great. And what does that equate to? Well, you saved $800 in interest. So you also saved $800. You have an extra $800 in your pocket. Not bad. Now, you'll see in those videos I put in the description that there are cards with the 0% new purchase rate that also give you cash back. There's a 1.5% card. There's also one that does a 2% back. Let's just easy math say that you got the 2% card. New purchases at 2%. So you spent or charged $8,400, you get 2% back. That's $168 that they will give you back, 2% of 8,400. So $968. So this method, in this example of a 9% loan, 2 years left, $25,000 car, and using a 0% with 21 months on new purchases with a 2% cash back, you're going to save 2 months. That's great. And you're going to save almost $1,000. So this method works. The lower your interest rate is on your car, obviously the least, you're going to save less money because you have a lower interest rate. But if you have a rate higher than 9%, 10, 11, 12, 13, 14, not unheard of, particularly on used cars, you're going to be saving a substantial amount of money and time. So I hope this helps. And don't worry about the exact numbers. You can watch this video and you can use a calculator online or just your own calculator and you can use your numbers. But if you're 9% or greater, you will save cash and you will save time, but you have to be very methodical in how you execute it. And I hope this makes you realize that there are many ways that you can help, I would call it hack, or use some of these tricks to save on your interest, save on time, save you money, and get you out of debt faster. So thanks for watching. I hope this is helpful. Please leave a like. And if you've got comments, I always appreciate them. I always like hearing back. Thanks for watching.